Some people are kind of chuckling away saying that, hey, you know what, NASDAQ's actually a lot more exciting than crypto is. Marco, go ahead.
I do agree some of the liquidity when we look at token listing have been locked up. It's not only in meme coin, we actually got locked up in ETF as well. The DeFi world, there's less DeFi trading a lot, right? The meme coin, the ETF have sucked it into CeFi, which a healthy Web3 ecosystem where it used to be. Actually, we have a lot of DeFi trading going on where I think the ETF and meme coin suck up a lot of that liquidity.
I do want to get actually into the topic of where instos need to be, like in terms of positioning themselves from an allocation perspective. But before I jump into that question, which is more about how they approach this market, I do want to get just a quick blurb from both of you guys and even Marco, where you see we are in the market right now in the cycle. So crypto Twitter, YouTube is kind of like really bored of what's happening with the sideways movement over the summer. It's quite anemic. Some of the professional managers that I've been talking to also find it very choppy and difficult to find momentum, especially trend following momentum strategies. But overall, if you're coming out the first 9 months of the year, double-digit positive in your 20s and up, you're looking pretty good. But maybe we can start with Chung and I'll jump back to Marcus. Chung, where do you see us right now in the market as a market maker and a trader?
Well, right now, I think what you just mentioned is that I don't believe that we are in the middle of a bull market. I think we are just at the very beginning. If you look at things from a halving perspective, the last halving was in April this year, right? So we are 4 months into halving. So we're less than 10%, before we reach the next halving. So I think right now, yes, the market seems to be, if you look at Bitcoin, it trades between 50K to 65, 70K. It's locked in this boring range. But the thing is underlying, and we deal a lot and we facilitate a lot of, we look at trades that under the derivative side, there's a lot of options that goes through. So there are very big whales that plays in this market, which sometimes you say like, why is the market going down or why is the market going up? It's all driven by large whales doing very decent size in options market, selling call spreads, selling put spreads. So that's one thing I think that's kind of like keeping this market right now locked. And we had this huge surge in crypto, in Bitcoin since January after the ETF. So I think right now it's kind of like stalling a bit. So from the market cycle perspective, I think we're still very early. If you look at the previous halvings back in 2012, 2016, and 2020, each and every halving results in a massive increase in Bitcoin's price. The largest was, I think, 2016 when it went up close by 30x. And even the last halving in 2020, Bitcoin went up from like 8,000 to 69 before it starts to fall down to 15K. So I think this time in April when Bitcoin went halving, it was around 64K. So I think if you get 5x from here, I think we can basically target around 300,000 in this cycle. So we're still early.
Yeah. Even from a fundamental sense, it feels like the majority of retail or even a significant percentage of retail haven't really come in to the space yet. Some who actually got burnt in the last cycle haven't come back in some cases that I know. Marcus, what are your thoughts here?
I think you can argue from various angles, right? So the way we look at the market is, okay, the market is like extremely liquid. It trades sometimes 40, 50, $100 billion a day, sometimes even twice that much. I think there's a lot of stories going on. I think the trade we sort of like right now is long Bitcoin, short everything else. I think this is like one of the trades that's really been working over the last year, last 18 months, basically since the bull market started, like right after FTX.
And I totally agree with you. Maybe just for those of us in Insto space who are sensing and intuitively sensing why, maybe just break down quickly why it's a long Bitcoin, short everything else.
So yeah, I think that the number one argument is really that you have a lot of token unlocks. And I think when you look at, we had, for example, like 1 billion or 2 most of the time per month, right, where token being unlocked, and they usually go to the founders, to the early investors. And of course, more and more, those people sort of need to lock in profits for their LPs. And so I think there's a tendency to kind of like sell part of those tokens. And when you look at, for example, in March this year, and I think in June, where we had more than $5 billion of token unlocks, you compare it to something like $17 billion of inflows through the ETFs, which, yes, everybody talks about it, but most of those ETFs, actually, they saw the majority of the inflows really in Q1, and then it sort of like has slowed down as well, or considerably. I think the biggest driver actually in our view has been stablecoins this year, which have issued, I think, more than like $30 billion. So I think there's a lot of money actually has come into this space, but you don't really hear it, Bloomberg or CNBC really. It's just, it comes sort of through the back door, smart investors, institutions. I think that's what we heard, for example, in the week of August 5th crash, where, for example, Cumberland and other entities were suddenly receiving something like between $2 to $3 billion in stablecoin inflows. So somebody has been buying the dip, right? And I think that's sort of like the flows. We look at it more tactically. I think it's a little bit more tricky this cycle than last cycle. I mean, last cycle we had like really great terms in terms of, DeFi is going to replace TradFi. TradFi has to become a lot more efficient, versus this cycle, it seems to be a lot about meme coins and dunking on retail. And I think these people that are losing money, they might not come back so quickly. And I think that's a little bit the worrying sign, that there is not too much sustainable stuff being really pushed right now. It's more really just trying to make like quick money. All these, for example, some of these meme coins that were really hot in, sort of like March area, right? Kind of like February, March. I mean, a lot of them have sold off like massively, and it's really like the whales that are sort of like selling these tokens. And I think some of the more promising project this year also tend to struggle a little bit. Where you look at Athena, was like a great bull market project, right? That has also really come back a lot. And I think people were a little bit also they're surprised how much suddenly there's like unlock and unscheduled unlock kind of like appeared, where early investors sort of like cashed out. So I think it's a little bit like this mentality right now where, yes, you can make an argument just how Bitcoin is structured, that the price could go up and up and up every year, right? And Bitcoin tends to go 1 year down, 3 years up, 1 year down, 3 years up. And we are sort of in the second year where we're going up now. But I think the strongest argument is that we're running really into Q4, and Q4 is by far the strongest quarter for Bitcoin, right? So we are having this troublesome Q3 right now that we're just crunching through, but maybe we're going to get a big rally end of the year.
Yeah, I almost feel like I'm reminded of like Solana Summer a couple of years back, when some of the gaming tokens after, what was it called? Axis Infinity started to blow up, and then Star Atlas blew up with its TGE as well. I think it was around August that year. This is about 3 years back. And that kind of triggered this massive altcoin rally. Not all of them participated, but it was quite robust moving into Q4. There's a view that maybe the meme coin has sucked up all of that liquidity that otherwise would have presented itself in the more, as you say, more productive altcoin space. And if you take that into account, maybe we already had the first leg of a more left translated cycle.
Yeah, Elton, and I think meme coins, right, they may be fun. Some of it may be fun. Maybe it gets community together. But by and large, I think more than 95, maybe even like close to 99% of meme coins, exactly borrow your phrase, is that it sucks up the liquidity. So this cycle, the meme coins are playing a big role. And meme coins, they don't add value, right? We know that they don't add value. There's nothing behind it. In the previous cycle, we have even like DeFi, during the DeFi summer, projects like Aave, projects like Curve, Uniswap, they actually bring some value there. It basically makes things decentralized finance. It brings value to the whole market. But right now, meme coins are just sucking up liquidity.
There was also another comment that a manager I spoke to last week, and felt that the AI narrative also sucked a lot of liquidity out of great projects that were supposed to launch this year. And Marcus mentioned Athena, which is a great example. And I think everyone was excited about that. But amongst others, they were not really able to enjoy the liquidity that ended up pumping up the Magnificent Seven over the last 6 months instead. And so now some people are kind of chuckling away, saying that, hey, you know what, NASDAQ's actually a lot more exciting than crypto is. Marco, go ahead.
I somewhat agree with you guys on some of the call. I do actually look at the market more healthy. I mean, crypto can go up after Q1 continuously to 100K or 120K. I think we are still really early cycle. I agree with John that we are mid to early cycle, this bull market. I think one of the point that is big, if you look at the bounce back recently from that carry trade and unwind, the market bounced quite heavily and then quite healthy as well. I do agree some of the liquidity when we look at token listing have been locked up. It's not only meme coin. I do agree that some of the liquidity actually got locked up in ETF as well that have not been released to the world. Where I think traditionally crypto use, if you look at the DeFi world, there's less DeFi trading a lot, right? The meme coin, the ETF have sucked it into CeFi, which a healthy Web3 ecosystem where it used to be. Actually, we have a lot of DeFi trading going on where I think the ETF and meme coin suck up a lot of that liquidity. But I think if you look at the correlations recently, have been highly correlated to NASDAQ when the market bounced. If you look at US stock market now already back up, actually I have quite strong view that in Q4, either Donald Trump or Harris make it. I think that will, before that we might already see a bull market upcoming, because I think with the interest rate cut, most likely they would do it. That's going to benefit it. I think some of it is priced in, but I think not all of it have priced into the market. So I think if this trend continue and release some of the liquidity in the market, that would definitely push Bitcoin into 100K. But I think from the ecosystem perspective, we need to fix how to release that liquidity from the ETF, which some of the things we have been doing in Hong Kong is try to do a secondary market lending borrowing. I think previously where BlockFi or Celsius play a big part is our CeFi lending borrowing, or some of the exchange like Binance, OK have been doing. These have been massively slowed down. And if we look at EVM transaction recently as well, have massively slowed down. So I think these are some of the things that from Web3 perspective that we need to work on to releasing that liquidity, so the turnover of the liquidity got much faster, the money velocity. We used to have very high growth and money velocity in crypto, and I think that has been slowed down. But as Marcus pointed out, I think we still see some in-seed money, like $2 billion inflow into the market. But I think try to move the market higher with this market cap now, like 2 billion couldn't do it. So we need like huge money, like a huge liquidity release from the macro market to actually pump the market higher. So I'm still looking for that. So I'm aiming for the macro side to actually release more liquidity into the market to actually have another bigger bull market. These institutional coming in like 2B, 3B, I don't think it's going to move the market that much higher. It's a healthy move, but then I think 2 billion couldn't push like Bitcoin from 60K to all the way to 80 or even 100, right?
I think Marcus was talking about the 30 billion in stablecoins that were printed. But yeah, I think your point still remains salient, regardless of how much it is. Is it enough to move the price where it is today at 62,000 or what, upwards towards the target of 300,000, 250,000? To your point, I think you're alluding to a conversation you and I had earlier, maybe a few weeks ago, Marco, was about whether or not now that the institutions have such a high participation rate in Bitcoin, how this changes the market structure.